time. And yes, as you can see, I am doing a victory lap. I am patting myself on the back. I am enjoying, once again, being right about the economic data. Again, when we talk about economic data, it is actually fun for me to make predictions and just see how I'm doing. But these predictions are just that. They are pure guesses. But what is important is how you see me lay out the dominoes and how I try to take advantage of what is going on. That is where I'm trying to lead you as we do these daily conversations. So, what exactly did I nail? Folks, we talked about the inflation report. It would be market moving this morning. You heard me talk about it with Dan Bird. You heard me talking about it with Taylor, Greg, all these other amazing experts. And most of them were saying, hey, inflation is going down, this, that, the other. I said, well, let's not get it twisted. I think it is fair to say that headline inflation is going to go down. The fact that we have been releasing 1 million barrels of gasoline a day for quite a while might be a reason. And it was. In fairness, I'm now looking at my board over here. I called 8. It actually came in at 8.3 headline. And I want you to realize that 8.3 is down. Kathy Wood can actually say and be technically correct, we now have a trend. We can now say, fingers crossed, peak inflation. We have hit it. I want you to step back for a moment and ask yourself this question. We got 8.3. And gasoline was down 10.6%. What happens to our inflation reading if gasoline is just 0? Our 8.3, I believe, goes up to 9.3, 9.4, maybe 9.5. The fact that gasoline was down that huge in a month tells you inflation is a problem. Inflation is broad-based. It is coming up through wages and rent. If you watched my videos with Taylor yesterday, Dan on Sunday, we went back and forth. I'm like, guys, stop talking about headline. It's all about core. You guys are missing it. Core's going up. I called 6.2. The experts were calling 5.9. It came in at 6.3. Inflation is not getting better. Inflation is sticky. In fact, it is going to get worse before it gets better. Rent, still only 6.2%. That is what's recorded. Wages have just started to go positive. We are now positive in real terms for 3 months. They're going to get worse. Think about the railroad strike. They are asking for 14% wage increases. Think about Starbucks and Amazon and Apple and all these other places where unions, they're going to get higher wages. Wage inflation is going to go up. Let's take the railroads for 1 minute. I want to ask you a question. Let's assume that today, tomorrow, next week, next month, they get what they want. Let's say they got 12%. Let's say they gave back 2 points. What do you think happens to freight, long-haul freight? Rates go up, folks. This is how it works. This is why I've been screaming, watch wages. The average employee has been underserved for decades. The last time the wage inflation really took hold at the bottom, not the CEO, was in the early 80s. It's coming. It's coming. The 52-year spreadsheet has all this information. I don't know why people just want to say that the 70s aren't happening again. Well, I didn't say they were, but you have some history that you can go look at because it is repeating itself. It is rhyming, as they say. So again, I want to ask all of you that follow me, stop watching headline. For the next year, it is 100% about core. The government has proven they can mess with headline. They can't mess with core. Core is all we should talk about. The other thing about headline, and this is scary. This took the wind out of me this morning when I read this at 5:30 in the morning, maybe 5:40 in the morning. Food inflation. Food inflation year on year is up, I want to be accurate, 11.4%. The reason that took the wind out of me is that is the highest number since 1979. And oh, by the way, if you've been watching my channel, you know I've been talking about yields from farmers at record lows. Folks, I don't know what to tell you. At the macro level, I stand by what I said. 2023 is going to suck. If you're an investor, if you take care of your micro, right? Macro, micro. If you take care of you and your family, you get prepared, you stack cash, you stop buying dumb shit, you can take advantage of what is coming. Your call. I know this much. Some of you watching this, and a lot of your friends who aren't watching this, are going to get scared. They are going to retreat. The reason I study the consumer is you guys move like a school of fish. I hate being in a school of fish. I want to be that fish that's on the outside by themselves, looking at the school of fish going, you guys are going to get attacked by a shark. I'm going to be over here by myself and not interested in being attacked by a shark. They're going to they move together, and they don't always do. In fact, they rarely do smart things. I'm sorry. So again, the CPI report is much, much worse than it looks. Kip, thank you very much, man. Do the work. Some of you guys need to buy this sticker. I have a sticker that says do the work. You guys need to buy that sticker and put it on your computers. Every time you open your laptop, you should see do the work. Go to my website, one rental at a time, and get yourself a sticker. Yeah, crazy. So again, CPI is worse than it looks. But okay, Michael, what happens? Well, let's lay the dominoes. Inflation is worse than it looks. The Fed is going to be aggressive. I now think there's a good chance that not only we see 4% funds rate by the end of the year, we might see 4.25%. What does that mean for mortgage rates? They're going to 7%. We could see 8%. Oh, the housing market is going into hibernation. It's going into hibernation. On that front, I actually saw a video from Altos Research. Actually, Matt, the mortgage guy, sent this to me, and he goes, Michael, you're the only guy that called this. I actually sent this out to our private Facebook group yesterday. If you are in my private Facebook group, do me a favor. Click on that Altos YouTube link and leave a comment saying one rental at a time called it. What did Altos Research say yesterday? Altos Research, an organization that I love, I respect, they're awesome. But at the intro of their video, they said, we were wrong. And then they said, no one called an inventory decline, which I take exception to. If you watch my channel, you know that I've been calling for an inventory decline starting in September. Folks, last week, it happened. Yes, I think that sticker should be on everybody's bumper sticker, computer. It needs to be somewhere, your mirror, that you can remind yourself to look at your buy box every day. Again, Altos Research said we were wrong. Altos Research is like all of these crash callers. They just assumed that inventory would keep going up. And I kept screaming, that's not how it works. We are going to have record supply destruction, record demand destruction. We are going to have a hibernated housing market until March. Then in March, it will get interesting. In March, it could get interesting. It could be interesting. I have no idea what's going to happen. More on that probably in January or February. But man, pay attention. And again, I do take exception. Altos Research, I did call it, and I would like credit, please. I get so much hate for all of these things. When I get it right, I would like some respect. Put some respect on the name. All right. So the 10-year note jumped to 3.43. I haven't checked in the last 10 minutes. It could be higher. We are going to cycle high. Cycle high was 3.49. Remember what happened to mortgage rate, cycle high 6.28. Would not shock me if we are above that today or tomorrow. Sorry, it's what I said is going to happen. 2-year note, damn, 2-year note. This one shocked me. When I looked earlier this morning, it's at 3.7. Yeah, you can actually get a decent return on your 2-year notes now. Pretty crazy. Gasoline, again, gasoline down 10.6%. Just think if that was a zero, we could be in the 9s again. And folks, winter is coming. They threw everything they could at it. Now they got to build it back up. We're going to be competing with each other at exactly the wrong time. Ugh. Food, 11.4%, highest since 1979. That is not a good thing. And then finally, shelter, still over 6%, but not high enough. This has to eventually report double digits. It's a lagging indicator, 6 to 9 months. This pain is coming. That's why you and I need to focus on core. Wages. Again, wages are just beginning. This is why I keep screaming core. Wage increases are already over 5% and in real terms up 3 months in a row. It has just started. We could go 12, 18, 24 months of positive real wage growth. That will, just like in our freight example, raise prices on everything. Sorry. Expedia. Remember airline fares. Airline fares were one of the things that came down in August. Expedia CEO says, proudly, business travel is back. Well, if that's true, and I have no idea because I don't do that anymore. If business travel is back, guess what happens to airfares? Up. And again, I read an article yesterday that holiday travel will be the highest cost in 5 years. Pilots are costing more. Flight attendants. It's going to be painful. It's not going to be quick. I am sorry. Protect yourself. Protect your job. Get close to revenue. Stop buying dumb shit and learn your market. I don't care if you're a stock market, real estate, NFT, crypto, trading cards, art, whatever it is. Focus and do the work. Goldman Sachs Prestige is laying off people. Goldman Sachs is laying off the bottom 1%. They are actually reinstituting an HR process they had for decades. They're going to whack the 1% and always try to get better. Some folks are going to try to sell that as a bad thing. I think more and more companies should whack the bottom 1%. On top of that, Goldman Sachs has a subprime problem. I don't know if you saw this, but Goldman Sachs tried to get in the consumer business via the Apple Card. And let me make sure I have the numbers. Here they are. Goldman has a subprime problem. They are seeing record losses, 2.9% loss rates, higher than subprime lending. 25% of the Goldman Sachs Apple Cards backed by Goldman, I don't know, however you say that, have a credit score below 660. Goldman, you're removing a little shine from that reputation by trying to get into the consumer business. Jeremy Siegel is out saying on-the-ground inflation is cooling. I disagree. I actually wrote that. This was yesterday. Jeremy, buddy, sorry, buddy, you're wrong. Rent the Runway out in the news this morning, whacking 24% of their employees. They are looking to cut 25 to 27 million in fixed costs. That was the last one. What else? Yesterday, Credit Suisse came out and said inflation is collapsing. We are going to have a powerful rally. Well, Mr. Credit Suisse, stop looking at headline inflation. Understand core. It ain't getting better. Yes, I'm celebrating a little. That's okay. All right, folks, that's what I got for you today. Yeah, not good news. CPI or inflation is bad. It's actually worse than it looks. At the macro level, the next 18 months are going to suck. At the micro level, you take care of you. You stop buying dumb stuff. You do the work. That's what I'll be doing. All right, everybody, take care of yourself. Have an amazing day. It is, what is it? Tuesday, September 13th. Like, subscribe, comment. We've got 261 amazing people watching and only 52 thumbs up. Remember, every time you hit thumbs up, an angel gets its wings. I stole that from Dion at Dion Talk. All right, everybody, take care. Bye-bye.